Right, so a very warm welcome to our first session of the year. This is the January 2024 session of our Spencer webinar series. If you're not familiar with Spencer, we are a nonprofit organization that supports future leaders of this industry. So that's college students that are interested in risk management, insurance, and actuarial science. We support students and universities through our various programs, such as our scholarship program, which is currently open. That application is going to close on January 31st. We also have a range of other grants that support experiential learning opportunities. And also, if you happen to be watching this and participating in our RMC, the International Risk Management Challenge, just a quick reminder that the deadline to send me your risk management report is approaching this week. So with that, we do have an amazing guest speaker with us here today. His name is Brad Turner, and he is the Vice President, National Product Manager, Flood at Burns and Wilcox. So, Brad, I will hand it over to you.
Thank you so much, and I'm really excited to be here. Thanks, Spencer, for allowing us to participate. These are cool sessions, and it's a different audience for us, so it's always very cool to be able to talk about insurance and what we do in a different avenue, especially to aspiring professionals that are looking to get into the industry or maybe are freshly in it. So very cool, and thank you for having us in here. As she said, my name is Brad Turner. I'm the Vice President, National Product Manager, Flood for Burns. We were joking about it before the start. I always get my title wrong too because it's a mouthful. But I was gonna, based on the audience, I think it'd be cool just to talk about maybe a little bit about our company and just also, kind of how I got into insurance before I kind of dive into Flood. Burns and Wilcox it's the largest privately owned U.S. wholesaler. If you're not familiar, wholesale insurance is really, it's a specialty insurance. So it's kind of trading insurance across a lot of different layers and avenues. So it's really it could be specialty based on the line of business, such as flood, or it could be, a lot of different avenues where maybe it's larger limits, higher risk. There's a lot of different ways to approach E&S space, but we are the largest privately owned, and that's important to us. Something we kind of separates us a little bit. We're not beholden to private equity money or anything like that. Not that it's a bad thing. It's just it's a different way to leverage things in the market. So, a lot of what we do it's long-term decision making. It's really we pride on ourselves on aligning expertise, long-term vision, being innovative. So it's a very healthy company. We do have 50 plus offices across North America. We actually got into South America this last couple years. We also have a brokerage firm, and also B&W also exists in Europe as well. So it's global presence is something we pride ourselves on as well. A lot of expertise across the world, which is a pretty cool thing. Get to see a lot of interesting things and hear about a lot of interesting things, insurance and otherwise. But what's really cool about with a wholesaler in particular is it's a lot of different disciplines too. So you've got anything from finance to underwriting to brokerage to underwriting specialty, could be risk management, or could be go beyond that. And there's a lot of different avenues to kind of enter in that space. But E&S is exciting right now. It's the largest. It's growing as fast as it ever has. Obviously, the admitted world, a lot of the big insurers in the States, it's a challenging time with climate change, and which we'll dive into a little bit in the presentation, but it's definitely an exciting time to be in E&S insurance. There's a lot going on. There's a lot more business flowing through that, just because it is requiring a lot of the risks that we see in the world today it's evolving. And it's evolving in a way that it really requires a nimble approach, as opposed to a reactive one. And that's kind of what the wholesale E&S space has done really well, and it's starting to really evolve and react in a lot quicker way. I would love to say that I was an RMI student, and I just had this great vision that I was going to be in insurance and I was going to, just take on the world from that perspective, but I did not. A lot of what I got into was by accident. I'd like to say luck. I think luck is about discipline. So I've always been a disciplined person, and always somebody that wanted to learn. I think that's important in insurance in particular. You have to keep learning. But I had to learn insurance from the ground up. I actually have I got it. I went from high school. I was great in math and science. That was what interests me. I was great at it. Didn't know what I wanted to do with it. Went into engineering at NC State University. I grew up in North Carolina along the coastline, so I'm very familiar with, all that exposure, which I'll talk about in a minute. But, I got 3 years into engineering. I was like, this is okay, but I really can't see myself doing this the rest of my life. Ended up getting into computer information systems, always good with technology too. So kind of a weird background where I did graduate in computer information systems. Actually, I did last piece of my education was online, kind of when, a lot of people were approaching it from online at that point in time. It was starting to become an evolving thing, and ended up working for the cell phone industry for 7 years. Uh, the technology piece, it was interesting, not great hours, pay was pretty good. But I was looking at the time I was growing, I had just had kids and was trying to find something a little more conducive to having a family. So I knew somebody that actually worked for Burns and Wilcox. Didn't know what that their last name happened to be Burns, which has nothing to do with Burns and Wilcox. I was like, they must own some part of the. I had no clue. I had no idea, but it was interesting. And so I got an interview actually. That was about 10 years ago. So I've been with Burns ever since then. And I can tell you, like I've had done a lot of different avenues. I have a lot of sales and marketing background, but this has been one of the most rewarding careers, or even jobs. But it's become a career. But it's really interesting day to day. Is It's not stagnant. You get a lot of variety. You get a lot of interesting things that happen. You get to see a lot of cool stuff. I mean, we write flood insurance for everything from very small buildings to, the celebrity homes that you see out in Beverly Hills and that kind of thing. So you get to see a lot of interesting things, a lot of fun to see, your famous names come across your desk, that kind of thing. Um, but, a lot of a lot of the background that I have, fortunately, has worked out pretty well. The engineering background, the piece of that education I've actually taken with me with some hydraulics and how water affects things actually has applied to what I do now. It's been a cool thing. I actually started my career as a receptionist, believe it or not. I actually came in, had to learn insurance in the meantime, answer phones for other people that were producing. So I actually did start from the bottom and have had a lot of success, had some things go right, but it's been a cool thing. I was in personal insurance in the beginning. I became a personal lines underwriter, specialized really in wind, wrote a little bit of flood, didn't really have a big flood presence within Burns at that point in time. And flood insurance, we'll talk about the timeline here in a minute, but flood insurance, as far as the private space is concerned, is very young. It's really about 10 years old. It's a very new kind of cutting edge avenue to write insurance in the private space. Predominantly was done through the NFIP. So we saw kind of an internal need, and it kind of took off from there. And today I run a program that I'm responsible essentially for managing all the relationships, all of our risk management. So we're responsible for our underwriting profitability. Do a lot of business with Lloyd's of London. So I've got to go through a lot of cool avenues. So started answering from phones, and now I've gotten into everything from risk management to underwriting to form design, all of those things. So it's been a cool thing, cool ride. Still riding the wave, but I enjoy my job every day. And hopefully you take something out of this. If it's not flood, maybe the ENS space and some of the things, the innovation that exists, it's a very cool thing. Um,
That is incredible. That is such a success story. Thank you for sharing that. Wow.
Absolutely. And insurance is just it's a very rewarding place to be because there's so many different avenues that you can use it in. But let's
Right.
dive into flood. This is why we're here, right? So if you
Do
ask me
it.
if you start asking me to talk about different avenues, I'm probably not going to be a great resource. But with flood, I've got it figured out a little bit. So I kind of want to test the audience and get this interactive, guys. And if please don't be shy during the presentation. You know, either type in the chat or you can, unmute yourself and speak up. I definitely don't want to hear myself talk for 45 minutes. So my Southern accent is not as lovely as I heard he complimented her on her accent. Very,
On my
very,
South African accent.
that
I
South
do.
African charm is not it's not the Southern accent. Most people can't stand to listen to me talk or can't understand me, so it's not as elegant, but hopefully you guys could speak up. So what is considered a flood event? A flood event, I had no clue coming into this what a flood even meant. I knew it involved water, but past that, I think most people probably assume it just includes water, and that's where it lands. I'm just going to ask some scenarios just to see how knowledgeable we are. So, um, let's say a pipe bursts in your home and it floods the first story where the pipe exists. Do you think that's going to be covered by a flood policy? You think maybe otherwise?
I would guess yes.
So it looks like Marissa said not covered by a flood. Anybody else got a guess? So Ryan says not a flood as well. So yeah, it's not a flood. That's actually covered by a homeowner's policy. How about a nearby river overflowing and causes a neighborhood to be underwater? Would you consider that maybe a flood, or would that be something different? So Marissa says yes. Ryan says yes.
Matt says yes.
Matt says yes. So yeah, that's definitely gonna be a flood. That's a pretty easy one. So a tropical storm causes sea level rise and ocean waves knock a home over, completely knock the home down. Do we think that's a flood event?
Matt says flood. Marissa says hurricane.
So yeah, this is a tricky one, and this is actually one that the insurance world and the adjustment world doesn't always get right either. Um, Typically, it's going to be a flood event. Storm surge in general, it's always about proximate cause, and we'll talk about it in a minute. But um, there are going to be some gray areas with tropical events, and that's why flood insurance in particular is really important, especially in a coastal sector, because the discrepancy or the difference between wind coverage and flood coverage, there's a gray area where they overlap, and so it's really about proximate cause. It can be covered under a flood policy. It can also be covered from other avenues too. So it's kind of one of those, but I did want to mention those uh, kind of gray areas because they do sit where they do overlap quite a bit with property. Last one. So heavy rainfall causes the roof to leak and saturates the interior of the home. Do we think that's a flood?
I'm gonna go for no.
It's like no in the chat. So right. So yeah, that's definitely going to be a property loss. That's going to be covered under the homeowners of the property policy that exists. So just want to kind of give you a general market definition of flood. It's a long one. I'm going to summarize it a little bit, but I mean, essentially flood it's going to be where dry land gets inundated with water, and it typically has to affect either two or more acres or two or more properties. And that's a real important distinction because you can think about it from like the pipe bursting, or even like we talk about sewers and drains maybe backing up, which is a common thing within a neighborhood. It typically needs to fit that definition of two or more properties um, to kind of fit the definition of flood, and that's kind of a definition, a defining line to kind of use that plug and play, put that in and see does it fit that flood definition. It's going to be where normally dry land is inundated with water. Could be an overflow of inland or tidal waters, so it could be a river, it could be the ocean. uh, Unusual or rapid accumulation of runoff or surface waters from any source. So think about maybe water accumulating from rainfall and then maybe running off. Or it could be running off from maybe like groundwater runs off into a basement. So that could also fit the definition. There's some other specialty type situations like collapse of land, and I don't want to really get into that because it doesn't happen as often, but just remember that land movement in general is not typically covered by a flood policy. One thing that can be is mud flow. So we think about mud flows, it's not something we use a lot, but landslide, mudslide, and mud flow, kind of a similar event, but the consistency of the things happening are different. So mud flow, I heard a great way to describe this at a conference this past year, and it's think of the consistency of a milkshake. That's what mud flow is. So it's going to be more water than it is going to be land. That can also be covered. So think out west is going to be the most prevalent exposure, California, that type of thing, where you've got large changes in elevation. terrain, you get runoff coming down. Mountainous areas, obviously, they definitely come into play. So these are the most common. So these are the ones that you see the most as far as a flood event's concerned. So surface water overflow runoff. So heavy rainfall also falls into the surface water accumulation. So this is honestly surface water accumulation, the heavy rainfall events, which I'll talk about in a minute, that's the one we're seeing a lot more of. Storm surge is going to be the one that you'll see on the news. That'll be the one that obviously, like the major hurricanes, we saw it with Ian last year, where we had massive water in front of that storm. You get wind pushing the ocean basically in front of that storm. All that water that pushes up floods those coastal properties. So that would be covered. Tsunamis is another one. So, and it's not one that a lot of people don't know if this is a flood event or not. I get this question all the time, even from insurance professionals. And approximate cause of tsunamis typically it's an earthquake or some kind of land movement that causes something offshore. But because of that, even the approximate cause being that, it typically is covered under most policies. It's not always the case, but typically would be covered. Mud flow we mentioned, that's another one. People don't think about it, especially in California. People think they're not exposed. Massive exposure. Think about wildfires. Wildfires have really decimated the western part of the country the last 5 to 10 years. We're seeing these wildfire events happening more and more frequently. Mud flow comes right after that. Typically, what you see is the vegetation's gone, that water comes in, land moves with that water. So anytime you have a major wildfire event, you can expect mud flow events to happen after that in subsequent years, even as you destroy a lot of the vegetation that exists nearby. I kind of wanted to dive into the timeline for flood because it's the scope of things. It's kind of a young, it's a young line of business. I kind of touched on it a minute ago, but private flood has not been around all that long. Private flood's only been around honestly since 2012. 1968 was the creation of the NFIP, the National Flood Insurance Program, that's administered by FEMA. NFIP was really created because before that time period, there wasn't the ability to insure any kind of risk from flood. They had disaster relief that kind of built up prior to that time period, where you could get a small amount from the government. And I mean a very small amount, in case of disaster. But they had major events to where whole communities were decimated and really no ability to rebuild. You really had to start back over. 1968, NFIP was created really as a way to, have the ability to insure. At that time, it was really meant for primary homes and commercial, businesses, small businesses. It's kind of expanded now into all dwellings, all, you have condo associations, you have condo buildings, major commercial property. It's really expanded into pretty much anything you can think of from a property perspective. In 2012, that's a big date just from a private flood insurance standpoint. The Biggert-Waters Flood Insurance Reform Act, it was kind of a way to make it where private flood could get involved. So that means, up until that point, you really had one source of primary flood insurance. Private companies were really unwilling to write it based on the landscape. There wasn't the technology that's available today, which you'll see how we kind of underwrite it in a little bit. But up until that point, you're really looking at some very base information, really judging it maybe off a distance to water, some very, arbitrary factors that we kind of see today don't really predict flood events overall. You can sit right next to the water and it can be a building can be constructed in a way that it really is not exposed to flood as much as you may think. And then you've got other buildings that could be an extreme distance away from flooding. A good example of this would be North Carolina had Hurricane Florence, where we saw flooding. It was 2018. We saw flooding 40 miles away from the coast, which you wouldn't think of from a hurricane, but it's flooding is very location specific, and that's what we're really starting to learn with the technology that we have involved now. But what's really happened since 2012 is you've seen private market has come in and really has innovated, and that's really what the private market has done. Private market includes wholesalers. It can also include MGUs, which are kind of they're managing general underwriters. They're really basically they're given authority from communities such as Lloyd's of London, where they have the ability to write flood insurance. They're responsible for the results that exist. So Burns, part of the program that I run it's an MGU where we're actually responsible for what we write. We create guidelines, forms, all of those things. What's been cool about that the last in really the last 5 to 7 years, you've seen kind of a boom. You've seen companies, more and more private companies have come in trying to write flood insurance in a profitable way. And so it's really benefited consumers in a large way, but it's also, it's created an expansion of more competitive pricing. It's also, you've seen more coverage included, higher limits are available now to the consumer, more information is available. So you get the education piece. In 2019, lending actually, so we had a private rule. This rule was an amendment to that 2012 Act. What it allowed us to do is actually, as a private insurer, now lending has to accept private insurance for flood. And so that's a big thing. You'll see a lot of the uptake for flood insurance, especially in the US, is predicated on lending requirements. Essentially, if you're in a quote unquote high risk flood zone, you have to buy flood insurance if you have a loan on it. What we'll see is that's not a good it's not a good predictor of actual flood exposure. It's kind of how we've operated in the past, and what we would like to see is that landscape kind of change. But one of the biggest things in the private space now is trying to push uptake. Getting people to be more hyper aware of what their exposure actually is. For the first time, we've actually are able to educate people and consult them and tell them what their exposure is, not based on some kind of line in the sand. Because I actually, my counterpart said this on the Spencer webinar, Mother Nature doesn't care about a line in the sand. And it's true, it doesn't. A lot of the flood maps that we have, there's these imaginary lines where we think that the risk just cuts off, and that's not how it works. And I'll show you why in a minute. In 2021, another big date, NFIP. So up until this point, the NFIP's really operated under some very basic kind of slotted rating. What that means is basically if you were a certain level above the expected base flood elevation, which is just the water level that they expect it to be in a 100-year flood. So say if it's at 5 feet and you're at 7, you would get a certain premium based on you are 2 feet above where they expect the water to be. What they've done now is all that private innovation is now moved into the public system. So they're actually using risk modeling. They're using a lot of the underwriting tools that we see in the private space. Instead of, they're no longer, flood zones and the relative elevation, all of those things, they matter, but they're not the end all be all anymore. And you're seeing a lot of variance. A lot of the premiums have gone up drastically because now they're actually applying what they expect to happen and what they've seen happen over time, and then also what we expect to happen in the future with risk modeling. So all that being said, there's a massive opportunity in the United States for an insurance professional to get involved with flood. It could be from a FEMA perspective, but it can also be, the private space is now rapidly expanding, with flood insurance for the first time. So it's an exciting time to be in it. And there's a lot of innovation happening. It's happening so rapidly right now where people are coming out with a new idea and 10 more people are taking that idea and expanding it. And it's exponential growth, which is really cool thing to see. The NFIP, it does serve, even with the private space, it really does serve a big purpose in the market, and it's going to continue to do so. It's a big reason why you see a lot of private companies. The NFIP hasn't been extended for a long period of time by our government for a very long time now. We kicked the can down the road twice this year alone. It was actually set to expire, I believe, in September, again in 2 months later, and now it's actually expected to expire in February. So what that means is, it's a government-run program. So if they don't approve spending for it, it shuts down the program completely. That means you can't buy flood insurance through the NFIP. NFIP is the bulk of the insurance for primary flood in the U.S. Obviously, historically, it's been around a lot longer. We saw private flood's only been around about 10 years, 12 years now. I'll show you the split in a minute, but it represents about 90% of the flood insurance written in the United States from a primary perspective. It's very important that it's there. it serves a lot of different purposes. Obviously, the insurance perspective, that's a big one. With the public system, because it was designed to be all encompassing, there's not many types of risks that it won't write insurance on. There's very few actually. The only thing it really decline a risk on is certain areas that don't participate, and there's some high risk areas to where essentially you should not be building. If these are areas near the coast, they're called Cobra areas. If you've heard that terminology, they're just coastal barrier areas where water is designed to flow in and out of, and they're very high risk areas as well. So they won't insure in those areas. But outside of that, you could have a flood loss 15 times and they will continue to insure you. They're going to offer you probably a buyout, but that's a big difference between the public system and then the private system is, risk selection. They can't decline risk. So it's very important that it exists because there's a lot of properties that have been built prior to really our education and the availability of information that we have now. So there's a lot of communities that exist that are really high exposure to the private market's not real keen on. New Orleans would be a prime example of somewhere you can think of where just high exposure, high frequency, the propensity of flooding, and the systems that exist there, they're not great at mitigating flood. It's gotten better, but there's going to be areas where that really, it's going to come into play, and the NFIP is very necessary. Also the risk management aspect. So, we mentioned that lending, that predicates a lot of the uptake of insurance from the flood perspective. FEMA and NFIP are just, they're the ones responsible for creating those flood insurance rate maps. At this point, that's the only thing that mandates flood coverage. So those imaginary lines in the sand that we said aren't a great predictor of flood risk are the only things predicating the requirement of it right now. It's an interesting kind of dynamic. So, we saw they're not pricing off of flood zones anymore, but when you build a home in those areas, there's building codes, all the risk management that goes into communities about where water flows, all of those things are ran by FEMA, NFIP as contributors to that. So, you build a home today, you have to build it to a certain elevation based on what they know the flood elevation are expected to be. That's a very good thing that should not go away. The cost of insurance is not always aligned with that exposure. But that's a very important purpose of FEMA and the NFIP. Governance is also another big thing. The forms that exist. So for a private insurer to come into the space, they actually have to at least be at the equivalent of the NFIP form. So for a consumer or a lender, they're protected. They have protections about how it can be canceled, what coverages are included at a base level, so that the consumer, if they know if they buy a policy from one or the other, they're at least getting a base level coverage. So a lot of that stuff does it originates with FEMA, the NFIP. Also, the limits that are available, the coverage inclusions, all of those things are kind of governed by that. Disaster relief is another big proponent of or component of FEMA and the NFIP. Obviously, the ideal scenario, everybody's insured from flood, but you'll see in a minute, it's one of the most it is actually the most uninsured or underinsured type of business from any risk perspective. Part of what FEMA does is they do offer disaster relief. So they have mobility units that go out. I'm sure you've seen them in major hurricanes, major events. They obviously do things with wildfire, any kind of natural disaster they're involved with. But it's a very important component. The other piece of that is, the E&S space that we operate in from a wholesale perspective, we write a lot of excess flood too. So we write a lot of insurance where, FEMA will actually, they only write a small limit. So for a home, for example, you can only get 250,000 in coverage. You think about property values these days, it's not going to cover most homes in a full, to a full replacement value. So we can also attach to that and offer limits above and beyond that, which is, having FEMA in place for those properties and having the flexibility to use FEMA in that policy language, all of those things. It's really, it really starts there with FEMA, and private space has really been advocates for the need for FEMA to continue. Private space can't come in and basically take all risk, or we'll be right back to where we were prior to the program, in the early 1960s. So kind of moving on, and why is flooding relevant? Why should you care about this from any perspective? Flooding is the number one natural disaster in the world. It's kind of interesting because, most natural disasters include, what is it? 2/3 of natural disasters actually include some sort of flooding, which is very interesting. It's considered a secondary peril for whatever reason that I can't understand at this point. I think it's because it's one of the most it's one of the hardest to understand from any one risk peril, but it can be involved in a lot of different things. We mentioned, obviously tropical events, pretty obvious, but you've got a lot of levee systems in the Midwest. We saw it in Michigan, the Midland flooding a couple years ago, where the levee, the dam had to be released, and you had flooding all through there. A lot of our communities out west, same kind of thing. Wildfires, where after that you get a lot of flooding, a lot of mud flow. There's just so many different times where flooding becomes a relevant component to a disaster. 99% of U.S. counties have experienced a flood disaster in the past 10 years. That's, to say everybody's exposed to hurricanes or wind, it's not always the case. It's pretty much 100%. You have the exposure to flood waters everywhere, whether it be rainfall, rivers, levee systems, tropical events, everybody's exposed. You're actually 27 times more likely to experience a flood versus a fire in a 30-year mortgage. That's kind of crazy, right? Everybody says I definitely need a homeowner's policy for, in case my home catches on fire. 27 times more likely. That's pretty nuts. Only 4% of American homeowners own a flood insurance policy, to put that in perspective. So 100% of homeowners, well, not 100%, but most people have a homeowner's policy. The extremely wealthy may not self-insure, but most people have a homeowner's policy. So 4% compared to 90+% probably. It's pretty crazy. Average flood claims also grown in the past 10 years. It's gone from about 25,000 to 44,000 on the average flood claim. So you think about it, in a 30-year mortgage, you have a $50,000 flood claim. You're responsible for the mortgage. You don't have flood insurance. Now you're on the hook for a home that is probably not going to be livable at this point, because anytime water gets into the home, you've got mold, you've got all those things that go along with it. You can't live there. So you've got something you've got to pay on. A lot of people, they rely on the disaster relief that we mentioned. Unfortunately, that's a long process. I remember after Katrina happened, I was talking to somebody maybe about 5 years ago. They've been waiting for funds for like 5 years, which was, or actually, I guess at that point it was probably a little bit longer than that. They've been waiting for disaster relief, and it was only going to cover, I think it was only going to cover about 20% of what their actual loss was. So in the meantime, they've been displaced, had to, move around. It's just a lot of stories you hear like that, where they didn't have insurance. Claim comes along. Not even, it didn't even have to be a crazy claim or crazy event. It's a big deal. It affects, displaces people for a long time. Of any disaster, it's really one of those. It's very difficult if you don't have insurance in place to recover from it in the same way. A lot of the flooding that we see now, there's been, even in the last 5 years, you can think about events that have happened. Hurricane Harvey, even Ian coming through. A lot of the flooding is happening outside of those non-mandatory purchase areas. It used to be about 20%. That's doubled in the last 10 years. 40% happen outside of the non-mandatory purchase. Yet all of our uptake is pretty much, it's dictated by lending and those imaginary lines in the sand that we talked about. So 21.8 million properties are exposed to flood, which is 67% more than the number on the current maps that are in place. That's crazy. So basically, we've got half the people that need flood insurance, have it, and even less than that if you base it on the overall uptake. So it's pretty astounding. And as this background that you see, I wanted it to be kind of zoomed out, but this is showing 2021 to 2051 by county. This was actually done by First Street Foundation, which has kind of modeled a lot of the flood risk. And in the next 30 years, you're going to see an extreme increase of flooding moving towards our coastlines. And I'll talk about climate change here in a second, but it's going to be even more important moving forward to make sure that we, as insurance professionals, we consult people, we educate them, We show them what their actual risk is. And it's not, this is something we do every day within our own practice is we predicate the need for insurance is not based on lending requirements. It's not based on imaginary lines in the sand. It's based on real data, real things that we can see and we can educate. We can at least make people aware of what their exposure is so they can make an educated decision. Um, so this is showing the FEMA flood maps, and this is cool. I got some of these graphics from organizational site that's a public resource, but this is a cool graphic that I saw. And it does kind of demonstrate what I was talking about. 72% of the maps are out of date. A lot of them fall into that 10-year or beyond. So that's the last time they were updated. Kind of give you kind of a view of how the NFIP works. Typically, it's about a 5-year process. The physical process where you have engineers, et cetera, that kind of plan, develop, and understand what the actual exposure is. To redo a map, it takes about that kind of time period. And we're talking about over, it's a big zoomed out map. So it's for the entire community typically. But it takes about 5 years, best case scenario. That's if they approach it. So they also have to prioritize, they have to make it a priority based on what resources available. So it's going to be based on how quickly is the population booming in that area, how much are they developing, that kind of thing, and how exposed do they perceive it to be. May not be accurate, but how much do they perceive it to be? All those things are decision making into the actual flood map. This is just the age of the map. So you can see if most of them are out of date, highly developed areas. So Houston comes to mind big time. That was an area where, when Harvey came through, pretty much all of that area that was decimated was an X zone, meaning a non-mandatory purchase area. I have the stat here somewhere, but most of that was not covered by flood insurance. They didn't have it. They didn't need it, quote unquote. They weren't in a flood zone, which I hear all the time, and it drives me nutty because you just see so many events where you shake your head and you want to give people the right information, hope they understand it, but it's just the system that we're based on, and it's up to us as professionals kind of to pivot on that. But you know that process taking so long, once you get to the end of that process, you actually have a lot of other things coming into play. There's politics that go in play, so the community actually has the ability to review it. So sometimes money talks, and there's going to be areas where you have high value homes. They don't want to lower the property value, and unfortunately, insurance suffers the way we evaluate things because of that. What is cool is that we are the pricing now has moved to more of a risk model, regardless of where those imaginary lines are. But it is unfortunate from a perspective of people being aware of what their actual exposure is. Hopefully that gets better, and it has gotten better as the private markets come in and there's more people actually talking about it. This is an interesting slide just because it does show the insurance gap that exists in the states. NFIP writes about $4 billion in insurance annually. Private market just hit about $1 billion, and that number about 5 years ago was only 300,000, I think. So it's really tripled in a 5-year period. But the market uptake, the total number, it's unchanged. So our uptake hasn't gone anywhere. We've basically just moved premium into the private market. Private market's been a little more innovative. So our insurance gap is immense. Swiss Re, which is one of the private or the largest reinsurers in the world, they estimate the current gap is about 40 billion in the U.S. alone, which is that's a pretty nutty number. So we're insuring 5 billion right now. 45 billion is the actual exposure that exists, and we already saw that's going to get bigger. So that's just current day. I already mentioned it, but 4% of homeowners purchase flood coverage. What's really interesting is Swiss Re has an educational piece. They do surveys, et cetera, studies. 64% of Americans believe they're not at risk, and 22% believe they're at risk, and 14% believe that they're unsure of risk. That 22% that believe they're at risk, 90% buy insurance. So that's the piece that we have to change, right? The education piece. It's really astounding where I can't think of any other peril where people are so unaware of what their actual exposure is. It's tough. It's really tough because I can see it on properties where you would say that property would absolutely never flood. And I can tell you, we see it time and time again in claims scenarios where you're like, there's not water anywhere near this place and it floods. So unfortunately, it's just that's the situation. Terrain, frequency. There's also surrounding events that happen that they're not, predicated on anything whatsoever. So it's really interesting to see the insurance gap that exists. Climate change is a big thing. It's a hot topic now, obviously. I think it applies to flood and wind more than anything. Flood in particular, it's going to drastically change the landscape over the next 30 years. This is just kind of showing, these are some cool graphics that I found. It's showing sea level rise based on the next, this is just showing over time in the next, I believe this is over the last 20 years moving into the next 10. These are just changes in sea level temperatures. And the big thing to keep in mind here is, climate change. I honestly, before I got into this, I wasn't convinced, and I thought it was more of a political kind of thing where they were just trying to scare people. And unfortunately, it's not true. There's a lot of data that exists that definitely shows that temperatures are rising, sea temperatures are rising. It makes a big difference with flooding from a couple different avenues. If you heard me earlier talk about rainfall being one of those big components of flooding in current day, what we're seeing, a lot of these X zones, these non-mandatory purchase areas, the reason they're flooding is because of heavy inundation from rainfall. What's happening is because the average temperature is actually a little bit higher, the atmosphere is holding a lot more moisture. So you're getting these extreme heavy rainfall events. It's about 70% heavy rainfall events have 70% increase in heavy rainfall localized events are occurring now. So you get a tropical event that comes through. Not only is it has the ability to be bigger, slower moving, but the rainfall that's associated with those events is extreme. It's a lot more than it used to be. So you don't only have to worry about landfall. So we think about Ian was a perfect example in Florida. If you kept up with that, came across the West Coast. Surge was 20 foot. So there's 20-foot wall of water in front of that storm above where it normally is. So you've got that at the coast where it hits, but what happens is it drags across the coast, and then you've got heavy rainfall that flooded areas like Orlando near Disney, where it just it completely flooded areas that should not, if you look at it, should not flood. But what happened is heavy rainfall couldn't be predicted at the levels that they got. I think localized, they got some areas that got 12 to 15 inches of rain in a less than a 12-hour period. That's an extreme amount of water. And that's what we're seeing. And what's interesting is, we talked about the NFIP history. The NFIP, for all the things that it's done really well, it is human nature to manage risk, right? So we all do it day to day. We've had a population boom on the coast. So stats, we had about, before the NFIP, we had about 47, let's see, we had about 47 million living on the coast. Now we have about 128 million people living on the coast. So you've seen about a 40% uptick in people living on the coast relative. That's relative to total population size. And you can see this map below here. It just shows communities. This is just concentration of communities that are exposed. The number you see here are actually community properties that are exposed. So you can see East Coast, West Coast to some degree, obviously the Gulf. Gulf and East Coast are going to see an extreme amount of flooding in the next 30 years, and it's going to get worse. You also see, if you think about hurricanes and how they work, we saw it last year. We actually saw a hurricane hit Canada, a Cat 1, which is crazy. You think about how cold that water is. But we're going to see major hurricanes start to creep up northward. So you're going to have places like, think about New York City, for example, which is a major flood exposure, some of the most concentrated property values anywhere in the country, very flood exposed. So you've got areas like that could be susceptible to seeing maybe a Cat 3 hurricane for the first time ever since we've recorded data. So that exposure, temperature rise with the moisture that's being held, the heavy rainfall amounts, the sea level rise. Sea level, it's risen about 6.5 inches, which doesn't sound like a lot in the last 50 years. But what happens is when you get a tropical event, that's exponentially magnified, and how it actually scales up to the water that hits the coast. So you got more property than you've ever seen along the coastline, combined with now you're probably the next 30 years, you're going to see more exposure than you've ever seen. So it's never been a more prevalent time to need flood insurance, especially in coastal areas. But even a lot of these areas in the Midwest that are protected by levees have a lot of major river systems. Obviously, the Mississippi running through the middle of the country is a lot of flooding exposure, which you can obviously see the origin of that and how that flows through the country. But California is also another one that there's a lot of perception they're not exposed at a high level from flooding, and they got their first hurricane that hit the southern part of the coast this year. They also had major flooding several times this year. Actually had a lake system that was created based on a flood event, which is pretty astounding. So a lot of things are changing, the way we understand the world, the way the environment's actually affecting the exposure. It's a big deal. Kind of wanted to kind of switch gears and talk about just what the private flood market has brought to the table, and some of the things that we use accordingly. And I'm going to try to go through this. This is the more interesting part of it. I'll show you some cool things that we use from a tool perspective. But I mentioned risk selection. Risk selection in the private market. We actually have all these tools available now that where we can say yes to this. The information we have available to us, I can tell you, been doing this 10 years, been in flood 9 of those, really. And I can tell you what I had originally in my career, I was guessing compared to what I can do now. Like, it was really a flip of a coin whether or not we were right or not from a claims perspective. Now we can be very calculated in how we select risk and what a good risk looks like compared to what it doesn't. A lot of that's predicated on technology, technology innovation, both from risk modeling and the tools that we use, has become very innovative. Even the approach of insurance now. I mean, you can as a consumer, you can go online and purchase flood insurance right on the website without even talking to a person, which is, it's kind of changed quite a bit, where it used to take 30 plus days to get evaluated and all those things that exist in the NFIP. So it's really sped up, and also made consumers more mobile. They have so many more options now that where they can evaluate differences in coverage, which private flood does bring higher limits, so you get you get the ability to fully insure risk. You can include more. You can get replacement costs for your contents in your building, so that you're not depreciated against in the event of a claim. Risk management's another piece. The private market is heavily involved in. NFIP, even though it is government funded, is actually reinsured by the private market. Lloyd's actually does reinsure that. That means now the risk is not all on the NFIP. That means if a big event happens, like a Ian, the private market actually takes part of that and pays out part of the claims, as opposed to the government, the taxpayer, having to dish out the difference in the claim value. And then risk modeling is a big piece. Kind of wanted to just show you. I couldn't bring my tools up. I wanted to bring you up and actually show you actively, but I wasn't able to do that. And she did put my LinkedIn in the chat. Please, I welcome you to connect on LinkedIn, because it really is something that any professional, whether you're current day or aspiring, really love talking to people about the private space, but also E&S, and more specifically our company. I take a lot of pride in what we do, but it's a fun place to work. So any questions you have, or anything we talked about, if you have any questions, feel free to connect with me on there. I definitely encourage you to do so. A lot of the underwriting tools that we have available now, as I mentioned, they're really specific. So it's so funny, because we got some of these tools in the beginning, and you'd put in you'd have a couple of risks, maybe neighbors. They were using the same insurance agent, and the agent was like, "Well, I just sold this to the neighbor, and it was $500." And then the two doors down, this is $5,000. What in the world? That doesn't make sense. What's really crazy about flood exposure is it's not distance to water. You got to think about, maybe if you walk outside and you see the change in terrain, All right, that's a big deal. The elevation, the change in elevation, and how is that exposed from where the water's coming from can really make a massive difference, even like 100 feet away. So that imaginary line in the sand, there's a lot of imaginary lines in the sand that exist in the real world. I mean, and that's what we're seeing with the technology. A lot of these tools that we use, this is kind of an overview. I just want to show you because it's interesting to me with the background that I came from. But like this is a view of Fort Myers, which is kind of landfall type area where there's a lot of flooding from Ian. I just wanted to show you kind of what it predicted. It did predict all the things that we saw, but this is showing us actual water level exposure from the river as well as storm surge. So how much storm surge and what these tools do. So I can put in a risk location and I can say, all right, put this address in. It drops a pin right on the building in the center of the building, and then it tells me what is the elevation there. So I don't have to be there. I don't have to have anybody survey it. They actually take it was applied military technology. It's called LiDAR. They actually fly planes over, and they actually can measure based on the map that they take. They can measure the elevation above sea level anywhere that they fly over. So we get active, and these are updated consistently, but they actually show us what the terrain is above sea level for any of these risks across the United States. So you used to have to take somebody had to go out there and physically survey it, an engineer. Consumer had to pay $600 to $1,000 to get it done. You know, it was just part of the process. You had to do it, and it was a big stopgap in insurance. Now we can see that elevation, but you know, above and beyond that, I can tell you what you know, if a Cat 1 storm comes through, I can tell you where the water level would be all the way up to a Cat 5. I can see how frequently that's going to happen based on climate change as well as past data. So it gives us not only a visual view, but it gives us a real way to underwrite in a very specific way. So this is actually a zoomed in view within this map that I just showed you. So I can see a 3D view of that building now, and some of the tools we have, this is a satellite view, but some of the tools available now, they actually are 10 times more granular than this. So you can actually, you could 3D walk around the building. And I'm not talking like Google Maps walk around it. I'm talking about like if you were there, it's very, very specific. So you can get a real day view of the risk without even being there. It's kind of creepy a little bit from a personal perspective, but from an insurance perspective, it's phenomenal. These tools, so this is just an example. If I dropped a pin on this building, some of the things I might get back. So it tells me when the flood insurance rate map was updated, what the zone is, what the FEMA elevation or what the FEMA base flood expected to be, what the building elevation is above sea level, how much water do we expect within a 100-year, 500-year return period, how much water would exist in each cat level event. So like if a Cat 5 hit here, there'd be 27 feet of water above sea level. That's if it hit perfect storm, high tide came through and hit that building, that waterway would produce 27 feet of water to that building. So it's pretty crazy how granular the data. So remember we started with this is +2 above this imaginary line in the sand, which the imaginary line in the sand would have said 10 feet. We can see that the water levels that exist in real world situation, it's just an average. You can see that's just what it takes to trigger a 100-year event from a FEMA perspective. These are the actual water values that would exist. It's pretty amazing. We actually have tested this over time just to see how accurate they are. And like Ian, for example, came through it was Cat 5, Cat 4, 4 or 5 borderline. 20 feet of water is what it predicted, and that's what actually existed when it hit landfall. It's pretty amazing. What's really crazy is like the miss on property. So there's properties that got completely wiped out, and there's properties that we wrote using this technology. They were the only properties that existed after. Now maybe that was luck, but some of it's calculated. So it's cool that the information that we have available to us based on these tools. You know, this is something else that's really interesting. So we can actually, this is the same exact risk you just saw. So we've taken a slice of the terrain across the river. And so this actually shows me what the river looks like on both sides. So that'd be important. Think about like an inland river. Typically you want to see what's the high side of the river? Where's the water going to go if it overflows? So this actually allows us to do this I'm in North Carolina. This is a Florida risk. I don't have to go anywhere. I just pick it up, put it in there, and I can see a cross section of the river and see which side of the river is the water going to end up if it actually overflows. So there's a lot of neat ways that we can get real specific and look at flood from a lot of different angles. Risk modeling is probably the most prevalent. I mean, you've probably heard this all the time, and I'm not going to go into it because there's a lot smarter people than me that go into this and do this. But the data science and all the things that go into this, you basically take a GPS location at this point, put in what the 100% property values are, give it some characteristics. So is it built on slab? Is it built on pilings, et cetera? And it will actually show you what the financial return will be. So that's pretty crazy. That's a lot of what we do from a premium perspective. We do through this risk modeling, but it really allows you to really know what's going to happen at a property. Use it as an education piece. Part of the other thing we use for risk modeling. This is an example of how we use it from a risk management. This was actually an active storm system. These aren't real risks, but it just kind of shows you an example. So from a event response, so when we send our adjustment companies out, we actually have the ability to see how the event's going to go over our exposure, and then we can tell them where we're most exposed and where they need to actually mobilize to. You can also see the surge events, et cetera. So it's just an example of how technology really is being used in an active way. The other thing I was going to mention, which we're about out of time, is parametric insurance. That's another thing new with flood, but also something where the private market has really come in and really use technology in a pretty granular way to give another approach to flood. I'm not going to dive into it, but I would definitely recommend reading about parametric coverage from a lot of different avenues. Flood is very specific. Wind is also something that's becoming pretty prevalent as well. I did want to open up the floor to any questions if anybody had any. I know we're running short on time, if I'm not mistaken.
Yeah, no, that was perfect. Thank you, Brett. And I loved your slideshow presentation. I loved all the droplets from the flood waters that were throughout the presentation. I really enjoyed that. And this was super duper informative. So thank you. Thank you for being here with us for an hour and sharing all of this knowledge with us. I did put Brad's LinkedIn URL within the chat box, as well as the URL to connect with Burns and Wilcox. So definitely follow them on social media and check out the website when you have a chance, including job opportunities, entry-level opportunities, internships, and things like that that are available for all of you to apply. So yeah, with that, we are going to wrap up our January session. Our next session is going to be on Thursday, February 8th. Our presenting company is going to be Chubb, and we're going to talk about embracing your authenticity within the workplace. So thank you again, Brad, for being here with us today, and we will catch you all next month. Have a good one.